Welcome to Markets Now. I'm Michelle Rook along with Mike Miner with Professional Ag Marketing. Grains to the plus side this morning. We're seeing a little bit more mixed trade in the cattle with live cattle higher, feeders lower, and hogs have been two-sided, but right now seeing a little pressure. And Mike, I want to start off talking about the grains, a nice recovery here. How much of that is putting some weather premium back into this market?
A little bit more. We've stayed pretty dry over the past 30 days, so some recent talk about below normal precipitation over that time frame has got things fired up a little bit recently. And then yesterday we had a little bit of a down day after maybe recovering a little bit too quick, it sounded like, and worries about the debt ceiling, kind of a risk off across all commodities there yesterday. And today we pick back up, optimism over that debt ceiling getting settled, or more optimism for it, and then getting that raised, and then looking at a weather pattern that shows the next 10 days again a little bit too dry now. So we all know that the corn crop here in the United States doesn't use a lot of moisture or water until about V10 anyways, so the end of June.
Yeah.
But up front here, I mean, you've got Nebraska, Kansas. That Western Corn Belt's still pretty dry, and we really need to build up some subsoil moisture levels to really get a good start on this marketing year. But longer term, I think at this point the corn market's just going to react. Is it going to rain or is it not going to rain? So we'll see.
Right. Yeah, it seems a little early to have a big weather rally
Yeah.
here. And we're running up into some chart resistance. So let's talk about what happens. You're going into a 3-day holiday. Sometimes you get some positioning ahead of that, but you come back from the holiday, the weather still looks hot and dry. Then what could happen? Can we take out some of those chart areas?
I do. And so the area I've been looking at here was about that 50% retracement level from that mid-April type high that we had there. That puts you at about 530. So I was really hoping that corn market could go up and get pushed back into that area. And we're getting pretty close here. December corn today, we're floating around that 528 area. So going into the weekend, I thought that was a really nice recovery. And you've got a tale of two cities right now.
Right.
You've got a corn market that has 130 plus thousand contract net short positions right now on managed money, that they're a little bit concerned about carrying into a 3-day weekend. Like you said, if they come out with a hot, dry forecast still, those shorts could be in a little bit of danger in the short term here. So I think that's a difference you're seeing, because soybeans don't have that large short position, or moderately large short position. So the soybeans we haven't seen maybe react as strong as what the corn market has here, and I think that's maybe just on some short covering here.
Yeah, no, I would agree with you on that. We're also seeing the bull spreads work. So when we talk about a tale of two crops, boy, we're seeing it in earnest. And so the spreads are having to do the work here, aren't they?
They are, and it gives you some flashbacks from last year. You're seeing the July September spread on corn right now really get above 73 cents again, but that has been
Wow.
a teenager. That has been all over the board lately. That's been a hard one to track. So we'll keep an eye on those bull spreads as we get closer to the end of this marketing year. But up front here, I mean, ethanol margins are fantastic. So we could see some nice demand here from ethanol plants, hopefully in the short term. And then new crop, I think that spread really shows that, up front here, we've got some short covering, but the funds maybe aren't too concerned yet about that new crop quite yet.
Yeah, it was interesting to watch the bull spreads working yesterday in light of the fact that this week ethanol production kind of trailed off and exports were pretty horrible on corn yesterday.
Yeah,
What
and
about,
I
yeah, go
agree.
ahead.
That export number's been atrocious, and when you look at what Brazil's posted at for basis levels right now compared to the US, we're not competitive at all, and they're coming into their safrinha crop here through May to kind of the August timeframe. They're a little bit later than normal, but June here, so they're coming into some better crop. You can pretty much mark our exports at this point out of competition. And then the ethanol side, we've got great margins. We just got to start making some ethanol at this point.
Yeah. The other problem with the soybean market, as I see it, soybean meal making new lows for the move again. Yesterday, we got below the $400 mark, and that was what kind of led us up. So it's been trailing down, yet we had very strong exports yesterday on weekly exports on soybean meal. So what's the problem there, Mike?
Bean oil. I think you really got to get a rally in bean oil to get this soybean market and meal fired up here. That's been getting hit hard. So I don't know what to think about the soybean oil side in the mean term here, or in the near term. But that crude oil price really struggling lately, I think, has had its impact around that low 70s type area. So I'd keep an eye on the bean oil for really the soy complex in general.
Gotcha. So the wheat market, again, like you say, has been all over the board. If we want to talk about some of the factors, though, you've got, whether you have Black Sea export concerns. And so the market is just trying to chew through all these things, isn't it?
It is, and that's kind of picky and choosy on when it decides to trade the Russia-Ukraine export corridor deal. It seems like we
True.
got extended another 2 months, so that was a little bit bearish on the wheat complex. But weather is still quite friendly in the United States here. Ending stocks are decreasing. That was one of the only bright spots, I'd say, out of the May Day still. So we're looking at some decent fundamentals to get that wheat market fired up, but I'd say the wheat market's just been disappointing for a lot of people here over the past year since that's all kicked off.
Yeah, and even though we have a Black Sea Grain Initiative extension, sounds like there's nothing being imported or exported out of there because there's no inspections. So that's something to
Yep.
keep an eye on. Let's move over to the livestock sector. Cattle market making new contract highs yesterday in both live and feeder cattle futures. We've been pushed by stronger cash. But, how much farther do you think will extend the uptick that we're seeing in live cattle?
We're pushing on record levels here continually, and we've had some really impressive cash trade up front here. I'm a little concerned yet with June futures being where they're at compared to the cash market yet. There's some discount there for sure in that futures price, so I'm a little concerned about that. I'm a little concerned about weights as well. We've went a little bit sideways, and I think we've had every reason to get current in this cattle market. Weights really haven't showed us that quite yet. The cattle would seem that they should be getting pulled ahead with these higher 1.8 or higher, 182, 184 this week for live cattle cash trade, and that should be all the incentive I think for guys to move some cattle here in the near term on cash. So I'm a little surprised that weights have went sideways and kind of hit the 5-year average. So that's what I would watch, along with the main concerns of demand destruction going forward, with box beef value starting to tip off here a little bit. So keep an eye on that.
So when do you think that is gonna tip over, or what's the signal to you that that's happening?
Not yet. I mean, demand is going to be the main thing. Keep watching those box beef values and packer margins. See how aggressive they can be going forward, because you'll have some concerns about packer margins here after a while if we continue to see this trend. And usually, you do see a little bit of a peak in this time of the year, anyways, on box beef values. So you eat steaks in the first part, eat hot dogs in the second part of the summer. So keep an eye on that. Otherwise, if weights don't go down, that's going to be a little bit concerning to me, I think, on the cattle.
But the slaughter figure has not pulled back here. I mean, slaughter's been running pretty robust, Mike.
But we still have beef production down pretty significantly year over year, that 5 to 6%. So that's going to be the other thing to watch going forward. And longer term here, we don't see anything from the cattle on feed numbers that would suggest any huge numbers should be hitting us in the short term. However, I'd say in the cattle complex, you've got scares that happened like last Friday after the close, where you came out with an atypical case of BSE.
Yeah.
And I think that was a really good reminder to guys like, yeah, that didn't hit the market at all. It wasn't much of an impact at all, but it was a good reminder that you're at record levels, and, proceed cautiously.
Yeah, especially when, we've been watching the debt ceiling discussions this week, and sometimes that spills over to your point. Hog market. All right, new contract lows yesterday once again. Is this really a demand problem with Prop 12 coming on, or did we already have a demand problem before that?
We've already had a demand problem before it, but Prop 12 really piled onto it here. So what we're seeing out of it is that you're going to see a lot more product get pushed into the United States overall because of this deal, and that kicks off July 2nd. So we've had in the short term here, June and July futures have taken that really tough, as you can see here, dipping back below $80, back below the index price, and concerns of California having some fire sales and pushing a lot of product to try to get them off their shelves before that deadline. And then just the idea in general that we're going to have more product pushed on the open market throughout the United States because of this is just something that is hard for these futures to get over here in the short term. And it makes it really hard to be optimistic on these futures at this point.
Plus, the cutouts really have not caught here either, have they?
No, I mean, when we saw that get into the mid 80s, I think there was a little bit of an excitement. And then we immediately saw it dip back to $80 on the cutout, and we're back to the same story again. So it's really hard to get too friendly. I mean, cash had a nice, really good advance there for a bit, but that's been numerous times now where we've seen a cash market try to advance, but we just can't get the cutout to follow. So the one brighter spot I think that worth watching is we're extremely current in the hog market right now. Weights are incredibly lower than where we've been historically, so that's something to keep an eye on. People are sick of feeding $7 corn, and I think that's something to watch going forward as well.
Yeah, because the profit margins are pretty much negative right now, aren't they?
Definitely.
All right. Thanks for joining us. Mike Miner with Professional Ag Marketing. That's Markets Now.